Filing income tax returns (ITR) can be a daunting task, especially for non-resident Indians or in short the NRIs. The complexities involved in understanding the tax implications of income earned in different countries, coupled with the procedural nuances of filing returns from abroad, can pose significant challenges. Hi, I am your host Riya, and in this video we aim to provide a very comprehensive guide for the NRIs planning to file their ITR for the financial year 2023 and 2024, detailing the requirements, procedures and potential obstacles. But before we move forward, make sure you have subscribed to our channel Freedom Money English and download the Freedom app. Let's first understand how can one attain NRI status and what are the NRI tax obligations. The first step in the ITR filing process for the NRIs is to determine their residential status for the financial year. According to Indian tax laws, an individual qualifies as an NRI if they have spent less than 182 days in India during that financial year. This status is crucial as it dictates the tax obligation for the individual. For NRIs, only income earned or acquired in India is taxable. This includes salary received in India, income from property situated in India, capital gains from the transfer of asset located in India, and income from fixed deposit or saving accounts in India. Global income or other hands is not taxable for NRIs. Let's understand by an example. Nidhi, an NRI living and working in the Boston, earns interest on her non-resident ordinary NRO account in India. Since she has spent less than 182 days in India in the financial year 2023 and 2024, only her interest income in India is taxable. However, her total income in India is less than the basic exemption limit, that is of rupees 2.5 lakh. So she does not have to pay any tax but must file an ITR to claim a refund for the TDS deducted. Now let's look at the filing requirements and the deadlines for the NRIs. NRIs are required to file an ITR if their total income in India exceeds the basic exemption limit of 2.5 lakh, if they have earned income from India, or if they wish to claim a refund for excess TDS. The deadline for filing the ITR for the financial year 2023 and 2024 is July 31st, 2024. Now let's move on to step-by-step guide to filing the ITR for NRIs. First, determine residential status. Confirm your residential status to understand your tax obligations. Second, gather all the necessary documents. This includes your bank statement, Form 16, Form 26AS, TDS certificate and details of investments. Visit the income tax e-filing portal. Register your PAN. Choose the correct ITR form. ITR 2 is for income from salary, pension or other sources except business or professions, and ITR 3 for incomes from business or professions. Fill in the details, provide personal information, income details, deductions and tax payments. Now verify and calculate tax liability. Ensures accuracy in the entries and calculate your tax liability. Submit the ITR form and e-verify using Aadhaar, OTP, net banking or by sending a signed physical copy to the Centralized Processing Center, also known as CPC, in Bangalore. Now let's talk about the common challenges faced by the NRIs. NRIs often encounter several challenges while filing their ITR. Number one is accessing Form 26AS and AIS. These two documents are very much essential for filing returns but can be difficult to access from abroad. Number two, Aadhaar OTP issues. NRIs may not even have an Indian mobile number, and that can be complicating for the e-verification process. Third is the banking issue. Some banks may not be compatible with the income tax portal for e-verification, and there can be limited access to net banking in some of the nationalized banks. Number four, time-consuming processes. Sending a signed copy of ITR-V to CPC can be a lengthy process. For example, Sagar, an NRI resident in Dubai, faced difficulties in receiving the Aadhaar OTP due to his non-Indian mobile number. He also encounters issues with the bank's compatibility. with the e-verification processes. To overcome these challenges, Sagar opts to send a signed physical copy of the ITRV to CPC in Bangalore, ensuring that his return is processed. As you see, it is a very lengthy process and can consume a lot of time. Now let's talk about which tax regime is better suited for the NRIs. NRIs, like the resident Indians, have two options to choose between: the old tax regime and the new tax regime, where on one hand the old tax regime offers several deduction and exemptions, while the new tax regime has lower tax rate but fewer exemptions. NRI must carefully evaluate their income sources and deduction to make an informed choice. Let's take an example. Rahul, an NRI with a significant investment income in India, opts for the old tax regime to benefit from deduction available under the section 80C, 80D and 80TTA. On the other hand, Rohan, who has minimal deduction, choose the new tax regime for its lower tax rates. Well, in order to conclude, it would be right to say that filing ITR as an NRI involves understanding the residential status, gathering all the necessary documents, choosing the correct ITR firm, and navigating potential challenges. By following the outlined steps and being aware of common obstacles, NRIs can ensure a smooth and accurate ITR filing process. The key here is to stay informed, be meticulous in documentation, and seek professional help if necessary to navigate the complexities of tax filing from abroad. Hope you enjoyed this video. Make sure to share it with your NRI friends and family, and follow Freedom Money English channel for more such financial update, and download the Freedom app. I am your host Riya. We'll see you in the next video. Till then, take care. Bye-bye.